100 years of stock market data. Every crash, every recovery, every bull run, and every bear market. I pulled the full historical record for the S&P 500 and the Dow Jones Industrial Average. Then I ran one simple question through all of it. If you invested $10,000 at the worst possible time, what would happen? The answer might change how you think about investing forever. Here is the experiment. I took maximum historical data from a finance. The S&P 500 index going back to 1928. That is 97 years of daily price data. I also pulled the Dow Jones going back to 1915. Over 100 years. I simulated investing $10,000 at every major market peak. Right before the crash. The worst possible timing. Then I tracked how long it took to recover and what the investment was worth today. September 1929. The Dow hits 381. Everyone thinks the party will never end. Then it crashes. By July 1932, the Dow is at 41. A loss of 89%. Your $10,000 is now worth $1,075. It takes 25 years to recover. 25 years. But if you held, your $10,000 is worth over $4 million today. October 19, 1987. Black Monday. The Dow drops 22% in a single day. The worst one-day crash in history. Your $10,000 becomes $7,800 overnight. Scary. But here's the thing. The market recovered within 2 years. By 1989, your investment was back to even. And today, that $10,000 is worth over $170,000. March 2000. The dot-com bubble peaks. The S&P 500 hits 1,500. Everyone is a genius. Then it crashes. By October 2002, the index is at 776. A loss of 49%. Your $10,000 is now worth $5,100. Recovery took 7 years. But today, that $10,000 is worth over $45,000. October 2007. The S&P 500 hits 1,565. Then the housing market collapses. By March 2009, the index is at 676. A loss of 57%. Your $10,000 is worth $4,300. This one felt like the end. But the recovery was the fastest in history. Within 4 years, the market was at new highs. Today, that $10,000 is worth over $60,000. Here is what every single crash has in common. They all felt like the end. Every one of them. 1929, the world was ending. 1987, the system was broken. 2000, technology was a lie. 2008, the financial system collapsed. And every single time, the market recovered. Not in a straight line. Not quickly, but completely. The pattern is undeniable. Crash. Fear. Recovery. New highs. Every single time. Let me put this in perspective. $10,000 invested in the S&P 500 in 1928. Through the Great Depression. Through World War II. Through the 1970s stagflation. Through Black Monday. Through dot-com. Through the financial crisis. Through a global pandemic. That $10,000 is worth over $57 million today. $57 million. From 10,000. The math is not complicated. Time in the market beats timing the market. Every single time. So what should you do with this information? First, do not panic during crashes. They are temporary. Second, invest consistently regardless of market conditions. Third, do not try to time the entry point. The best time to invest was yesterday. The second best time is now. The data is clear. 100 years of evidence. The market always recovers. The only way you lose is if you sell at the bottom. Subscribe for more data-driven investing experiments. Every week, I run the numbers so you do not have to. Drop a comment with the next 100-year question you want me to test.